AVAX is pressing the $10.50 ceiling after weeks trapped between $8.20 and $10.50. That range is the entire story. Buyers have repeatedly defended the lower area, but sellers have stopped the token near the top. A range break matters only if volume follows it. Without that, AVAX can touch resistance, fail again, and return toward the middle or bottom of the band. Sideways ranges compress energy, but they do not reveal direction until one side forces a real close outside the box. The longer the price stays inside that range, the more crowded the next move can become. Traders who waited for confirmation may enter together, while range traders may take profit at the same ceiling. 24,784 should be understood through repeated tests. When an asset keeps returning to the same resistance, two things can happen. Buyers can weaken the wall because sellers run out of supply, or the wall can reject price again because demand is not strong enough. AVAX has also shown higher lows around the $8 to $9 region, which means buyers have been stepping in earlier during pullbacks. That improves the setup, but it still leaves the token trapped until $10.50 breaks with conviction. The support map is clear. The $8.20 to $8.50 area is the lower range that buyers have defended. The $10.50 level is the breakout trigger. If AVAX closes above it with real volume, the first upside zone discussed by traders sits around $12.20 to $12.80. If the breakout fails, the downside path points back toward $9 and then the old support near $8.20. This is why a single green candle is not enough. The hold after the candle matters. Those levels also help separate a tradable reaction from a real trend change. If volume is missing, the move can look impressive for a few hours and still fail by the close. DeFi growth and cross-chain use keep Avalanche on the radar, but the chart still needs confirmation. Network relevance does not automatically create a breakout. 24,784 has to show that buyers can absorb sell orders at $10.50 and then keep price above the former ceiling. In plain English, resistance must become support. That is the shift traders need before calling the range resolved. If price slips back into the box, the attempted breakout becomes another rejection, not a new trend. The same logic works on the downside. If buyers stop defending higher lows, the market will treat $10.50 as a failed test and focus back on the lower edge of the range. Longer-term recovery talk is less useful until the short-term barrier breaks. Big targets can sound exciting, but they depend on AVAX holding the accumulation area and proving demand above the range. A token can have strong ecosystem arguments and still remain pinned by a technical ceiling. The market first needs a clean close, volume, and follow-through. For AVAX, the practical question is not how high projections can go. It is whether the $10.50 level finally changes role. That makes the first retest more important than the first breakout candle. A retest shows whether buyers who missed the move are willing to defend the new floor. The next signal for 24,784 is not a wick above $10.50. It is a sustained move that keeps AVAX above the breakout level after traders have a chance to take profits. If that happens, the $12.20 to $12.80 area becomes the first practical test. If it fails, the range stays alive and the support zone becomes important again. The clean outcome is simple to track. Close, retest, hold, then watch volume. Volume should expand during the break and stay respectable during the retest. If volume disappears immediately after the move, the breakout has less support from real participation.